The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 5th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two, or three or four, as many as I can come up with here. Now, look not sorrowfully into the past. It comes not back, because it comes not back again. Wisely improve the present, for it is always here. Go forth to meet the shadowy future without fear and with a manly heart. That comes from Henry Wadsworth Longfellow, even though I seem to have butchered that a little bit. You know, so many people live in their past, and what I know is this: the past, folks, it does not equal the future. That is, unless you want it to, and by wanting it to, what happens is you end up becoming a prisoner of your past versus a pioneer of your future. That one's a Steveism. Now, Carl Sandburg, he once wrote this. He said, "The past is a bucket of ashes, so live not in your yesterdays, nor just for tomorrow, but in the here and now. Keep moving and forget those post-mortems out there." Now, I want to leave you with a few thoughts out here. Like a farmer, yesterday we were talking with Z in the den about soybeans. So, like a farmer, please allow me to plant what I think are maybe some seeds of wisdom, some things for you to think about. So, it begins like this. People are unreasonable, illogical, and self-centered. Not all, but many. I say, love them anyway. How about this? If you do good, people will accuse you of being selfish or maybe some other ulterior motive. You know what I say? Do good anyway. If you're successful, you'll win false friends and true enemies. You know what I say? Succeed anyway. Honesty and frankness, they will make you vulnerable. You know what I say? Be honest and frank anyway. How about this? The good you do today will be forgotten tomorrow. Does that sound familiar? Well, do good anyway. How about this? The biggest people, some of you have been in meetings. I know this. Some of you have been in meetings. The biggest people with the biggest ideas can be shot down by the smallest people with the smallest minds out there. You know what I say? Think big anyway. People favor underdogs, but always foul the top dogs out there. You know what I say? Fight for some of those underdogs anyway. How about this? What you spend years of building may be destroyed overnight. So build anyway. And number 9, give the world the best you've got, and you'll get kicked in the teeth. Well, give the world the best you've got anyways. My goal, as always, is to give you the best that I've got, and trust me, I've been kicked in the teeth a few times. In fact, I lost my 2 front teeth when I snatched a slap shot out of thin air. Not something that I suggest that you do, but I did it anyway. So let's go take a look at these markets here. Let's go see what they are doing anyway. Right now, we've got the Dow trading off 55 points. S&P down 6.5 at 1624. NASDAQ Composite off about 10 points right now at 3435. Russell 2000 down 3 points. NASDAQ 100 off 7. New York Stock Exchange, that is the leader in the clubhouse. That is down 0.6%. We've got 1,000 net declining issues here. That slide continues. Our call-in number is 877-927-6648. Let's start off by taking a look at the indexes out here. Let's go take a look at the S&P 500 so that I can get that up on my screen here. Let's go see what that is doing here this morning. S&P right now, that's not the S&P. I've got the New York Stock Exchange. We'll come back to that momentarily, but let's put the S&P on my screen. That is traveling at 1624. As we take a look at the S&P 500, we can see this rising price channel. Let me get this little marker out of the way here. So the S&P 500 looks like it is going to test this morning the rising price channel that was established coming back into the lows off of November 16th. And here I'm just simply using the open of the bar from November 16th. That's really my first touch point. And then I'm using the open at April 16th's low, the close on April the 17th, just to set up that price channel out there. So we'll see if the bulls are going to go ahead and defend this position. As far as price, it's down a little bit below the level of 1622.72 or so out there. Once we get it closed below 1622, there's really nothing to stop the S&P 500 from moving down quickly into that April 11th high. That's 1597 out there. But what I really suspect is what we'll see. The real first test inside the S&P 500 is going to be down at that 1576 level. That was that November 11, 2007 swing point high. We looked at that for a long period of time before that was taken out. That was a long period. That was a long consolidation time frame. And so we'll see if this has been a false breakout. The key here is if we take a look at the 200-day moving average. Let me put that up on the screen here. Let me get rid of, because it's got the 9 and 18, which are about to cross over. In fact, let me just do that. Let me close this here first. So if you're taking a look at, if you're watching us on Tiger TV, thanks so much for doing that. Maybe you're listening in on your mobile device at tfnn.mobi or a radio station, so I'll explain to you what we're looking at. But you can always catch the archive of this show on Channel 10, or if you prefer, you can get the live stream by going to the homepage of tfnn.com, clicking on that little icon over on the upper right-hand side. You'll see 3 little smartphone buttons. Click on that. This show will stream live to you. Now, the blue line, there's a blue squiggly line, there's a red squiggly line traveling with inside that rising price channel. The blue one is the 9-period Johnny Cash, Basil Chapman exponential moving average. The one below that in red, that's the 18-day. And you can see here, since the move off of the low, we had a crossover that actually occurred, a positive crossover that occurred either November the 28th or November 29th out here. We have not seen a cross through to the downside. We ran into it very close. We ran into it as the market was making lows back in April 19th and April the 18th out here. You never really got it was very close, but not really the crossover or cross through, I should say, with any kind of conviction. So here is going to be something for us to be paying attention to. Right now, the 9-period EMA, 1639.95. The 18 is at the 9 is at 1639, and the 18 is at 1638. So if we get a cross through of that, that itself will also signal, that'll be one more signal of a change in trend in the marketplace. Now, as I take the S&P 500, I move it back here to the left-hand side. You'll see how you can use this as another tool. Now, this is never, and I mean never, this is never, ever going to be able to call a top when you use a lagging indicator as these moving averages. But they are really great for being able to understand trends. They're really great from a lagging standpoint to understand when a trend has actually changed out here. And you can see that you want to be in, absolutely you can be in long positions when the 9's above the 18, just like you can use this for more of, more between the daily/weekly time frame when you start to see a slip below that level. Last time we saw that, I'm just really coming back to the last sell in May, the last unfavorable seasonal selling cycle out here. That was last May, and you can see on May 4th, that's when we saw the slip. May 4th, or maybe it was May 7th out there when we saw the true slip below that, and that led down to the lows that were put in June 4th of 2012 out there. So that is something that you can go ahead and plot on your chart as well, and it's something that you're going to want to be paying close attention to because we're very close to seeing that cross through here today. So you've got that you're dealing with, so that's where you're getting a little bit of a kiss. You're coming into the rising price channel out here. Looks like we may get a really good release of information inside the S&P 500 here today. Now, key, once you do see, if we do in fact get that cross through, key is really going to be that 1576.09, that November 11, 2007 swing point high. So make sure that you've got that written down on your pad of paper. Let's go take a look at some of the other indexes. Let's go take a look at the we looked at the transports earlier. Let's pull them back up here as well. The transports had broken through the hammer candle from May 24th. That low was 63.26 out there. That was on the session, as I say, of May 24th. Now what the transports want to do is come back and test the hammer candle that was left behind here on April 5th. Either the high at 60.4478 or the low should really be your support, which is 58.7812 out there. Right now they are trading at 61.75. Let's go take a look at the Dow, see what the Dow is doing here this morning. There we go. The Dow also moving down towards its bottom of its rising price channel. Let's go ahead out here and also put the 9 and 18 day on my chart out here. Question is, which tab do I have that under? Got so many tabs out here. Give me a moment for this to actually. Come on, baby. Come on. Oh, why is this thing delaying? Oh, that's not a good sign. Luckily, there's only 3 minutes to go here, but I seem to have a little freeze. There we come on. Oh boy. Okay. Now I think we have it sort of working. All right, I'm going to delay here while I'm trying to fix this. Now this really requires a lot of multitasking. Right now you've got the Dow is off 87. The S&P is down 10.5 out here. So we've got the selling moving back. Come on. Well, folks, this thing here is somewhat frozen, which means, and I hate to reboot this during the show just in case while I'm on here, just in case this frees up for me. So what we're going to do when we come back from break, oh, there we go, after I freed up. Okay, maybe I might be able to do this now. Nothing like live. Let's see, I'm going to say, oh, man, I shouldn't have done that, right? I've tried it again, even after I got rid of that. And so this thing really wants to mess with Stevie here. So I'm not sure what's going on, but I'm not going to pull it up again once it finally breaks through. But what you'll want to do on your Dow chart here is go ahead and plot that same 9 and 18-day exponential moving average out there, and look for that cross through as well. Now the Dow right now is down below. Come on, a minute and a half here. There we go. All right, so I've got that off my screen. So we've got the Dow trading below the lows out here from Friday, May 31st, which was at 15,115. You can see if we try to find some bullish candles out here, where's the bullish possibility for some type of support? And really, you'd have to come back to this last area of resistance here that it broke through. You had a big bearish engulfing candle, which was on April the 15th. So you'd have to say that support inside the Dow right now is going to be the high of April 11th, right around 14,887 out here in the marketplace. Let's see what other tools are working here. I'm going to just take a look at the retracement now coming off of the low here from November 16th all the way up to the high that was put in on May 22nd. So your you're just your dead cat bounce, your 0.382 retracement takes you to 14,369. So if we see the Dow go ahead and break the rising price channel here, then the next move down really, even though we've identified, it'll find some support at about that April 11th high, around 14,887, but it'll head all the way down at least to the 14,369 area. And maybe during the commercial break, I'll try to put that 9 and 18 day on there. But when we do come back, we're going to take a look at the New York Stock Exchange, because if you're wondering whether the change in trend has taken place, I can tell you the charts are absolutely saying it has, without question, undoubtedly without question. 877-927-6648. We'll be right back.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 74, S&P down 9, composite off 16, and let's go back here to the let's go back to that Dow chart. I was able to make that adjustment during the breakout there, even though the system did not want to cooperate with me. But I just simply kicked it in the teeth. How about that? Now we're going to take a look at the Dow. We're taking a look at that 9 and 18-day exponential moving average. Right now, the 9-day is at 15,217, the 18-day at 15,191. So they are getting very close as well to crossing over, and that's something that you're going to want to be paying attention to. You can see here again, really coming off of the lows in November, when it finally made a positive crossover, which looks like took place on December the 5th. Yeah, December the 5th was when you saw a positive crossover. We have not seen the negative crossover, the bearish side of the lagging indicator out here. We've got plenty of indicators inside the Dow that it is ready to correct. You got that key reversal session out here. We've had volume off of the highs on a number of equities inside the Dow, so it's giving us all the signals right now. It's simply going to go ahead and test the rising price channel, but let's keep close attention to the 9 and 18-day exponential moving average. If we go take a look at the wider swath of the marketplace here, let's go take a look at the New York Stock Exchange. And what we have now this morning is we have that actual crossover. If you take a look at yesterday's readings on the NYSE, 9402 was the 9-day, 94.08. Actually, I guess you had a crossover here yesterday, just light crossover yesterday was the 18. And if we take a look at this today here, 93.71 and 93.91. So that is just simply widening. We're making a lower low. If you take a look at my chart here, I'm not going to explain entirely what is going on here, with the exception of a tool that I've been able to identify to help understand when a trend is taking place out here. The trend either moving to the upside, that bullish move, and really combining, taking a look at the lows that are being made at the same time that I'm getting into extreme readings utilizing this indicator out here. And what we can see right now, in fact, if you come off of the bottom, there was the change in trend out here. We saw in the bottom that I'm referring to is the June 4th area. So in June of 2012, the market was consistently making lower lows as we were getting these extreme readings down here in this indicator that I'm using. The very first time when the change of trend took place really was back in July 24th of 2012. That was your confirmed change in trend as a higher low was being made. And you can see the market just simply continue to move up. The market's going to do one of three things. It's either going to consolidate by moving sideways, and we know that we can use consolidations to our benefit. It's going to move up, or it's going to move down. These yellow bars here representing where, when this indicator finally bottoms out and starts to make a move, has it made a lower low than the prior time period, and just using something, just keeping it simple, just doing nothing more than keeping it simple. Now, if we fast forward to where we're at today, you can see here that the change in trend is now beginning to form here. I really should make these probably yellow just to be consistent, these lows. We're making our third lower low as we get another test here of this extreme oversold territory. So the change in trend simply being that this was identified for us on the trading session of May 31st as that lower low is made. Now using a lagging indicator, we've got that confirmation. We had the key reversal. We had the island reversal. You've got the entire NYSE, the McClellan. If we take a look at the summation index here, I'll go ahead and pull that up so we can take a look at that. That is the upper portion of the top portion of this chart here is price. The portion right underneath it, that's your McClellan summation index. Don't pay attention to today, this flat line here. That flat line doesn't mean anything because it's not updated for today's. But just take a look at being able to catch the trend here. The trend is pointed down. You can see utilizing the relative strength indicator, relative weakness indicator. We are not in an oversold condition at all. It's got much further to move right now. That reading's at 41.85. It doesn't start to get into oversold territory until you start hitting the 30-ish range out there. So it's got it's got room to go. The oscillator, that went below zero. Once it went below zero, that's when we so-called had the fumble between the bulls and the bears in the marketplace out here. Now, look, this has been a market where bulls have had the opportunity each time to buy the dips. And when we see the change in trend in the New York Stock Exchange taking place, to me, what you really want to do is you want to sell any of the rallies out here. We are going to see dips being bought because they have been rewarded really all along. But the change of trend, folks, it is absolutely taking place out here. 877, it's doing it right in front of our eyes as we use some of these indicators. 877-927-6648. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. As we come back here, we've got the Dow's off 64, S&P is off 8, Russell 2000 down 5.5, and we can see here where the battle is underway inside the ES Mini. We're taking a look at that price range right around the level here of we'll use the low of 12 noon on June 3rd, 1620.75. So we're just going to call it 1620 out there. That's where you had a little piercing candle that took place at 12 at the 12 o'clock session. Had a candle yesterday at 2:30. Looked very close to a hammer, but it was not. But you did get the bullish engulfing candle to follow. That means that it's actually the low of that candle session prior that ends up being support. That was a 2:30 time frame. That's 1620.150. So that becomes an area of support where the bulls are defending their position. We had another hammer candle that came in this morning at 7 a.m. That low, 1621.75 out there. So we can see that this is the area where the bulls are really defending their position. Now, as the market was moving down during that last half-hour segment, as we were coming in at 10:30 session, you had the ES Mini get down to 1618.50. Yet it was doing it with less relative strength down, or less relative, just simply less relative strength out there than even the session that was formed and made right here at 7:30 this morning. So that is really saying that the move down here doesn't have enough energy to push through. Yeah, it was a little bit of price destruction out there, maybe taking out stops or things of that sort, but it's still, even with that move down, it did not have the energy behind it. Now, it's an important area, and the bulls know that this is an important area to defend because it's been in a consolidation really ever since the big push down here with the volume coming into the close last Friday. And so the top of that consolidation, 1642. The bottom of the consolidation is 1620. That is a 22-point move out there. 1640, 22-point move inside the S&P. So the bulls are really out here trying to defend that position. If we see a close on this 30-minute chart here below the 12 noon time frame, we're going to call it 1620. Yeah, so if we come into the 11 o'clock session here, we've only got about 24 minutes to go. If we see a close below that level, that's going to set off an avalanche of about a 24-point move. Is it going to take place overnight? No. It's going to take place right away? No. But that's what will happen because it will have broken a consolidation level. Also, what happens is you've got a 1 to 1.2728 to B equals CD pattern off of the highs from May the 22nd that take you right down to about 1607. So that sets up the run between the 1600 to 1607 range if the 1620-ish area does not hold. So we can watch the battle unfold out here, and it's good to understand the battle that's going on. It's really helpful to understand what kind of real strength is behind the move. Now, one of those things to measure strength is certainly going to be volume pushes down, but there's other indicators that you most certainly can use to help you to identify that as well. So that's on the ES Mini. That's the 30-minute chart that we're taking a look at. Speaking of volume, let's go and take a look at the 10-minute bars here inside the ETF structure. Let's go see what we have going on here. We've got the diamonds up on my screen. That big push on Friday came in with a volume of 1 million shares. That is during the last 10-minute session out here. That level held yesterday as the push went lower. That took place at about the exact time was 2:10. During the 2:10 time frame, that area held. Now that area is acting as a resistance zone as the diamonds have pushed through that. We take a look here at the volume today. So we've been trading for an hour. Let's take a look at the volume in the diamonds so far. 1.5 million shares. So volume, if it could keep up that level, probably right around the 6 million share range. Yesterday did 8 million shares. So right now, as it's moving lower, we're not even seeing the same volume that we had yesterday inside the diamonds. Diamonds are taking out the May 23rd low. That's got 10.4 million shares out there. So the diamonds are going to need to get some more energy, some more volume into it. Let's take a look at the SPYs here right now. The SPYs are trading at 162.71, and the SPYs are trading below right now this little hammer candle. This is a hammer candle from June 3rd, and that makes that low very important to be paying attention to today. The close of that. Testing it, that's no problem. But closing below 162.66, that just gives you additional bearish information in the marketplace because you close below that hammer. Now, where the SPY will head to is certainly going to be the gap. Now, the gap is not that much further below. The May 3rd low is 161.04, so it's headed to the SPYs would be headed to 161.04 or to the high, which I would presume is really what it would do, and fill the gap, get up to the May 2nd level, 159.89, before it really releases any kind of information to us. But that should act as a level of support. We'll see as it does. Now, that session from May 3rd, that gap up, that had 144 million shares. The top of that candle is 161.88. SPYs have not made it down there. But volume today so far in an hour of trading is 40 million shares. That's about 240 or so. So you've got twice the volume now inside the SPYs. Now, that says the volume would have to maintain this level that we have seen during the first hour, which is not the case. But you do have a good volume in it as it's coming against that May 3rd swing point. Hasn't made it into it yet, but that was a sign of strength there with 144 million shares, and you're coming into that, it looks like, with more volume than that. Yesterday, the volume in the SPYs expanded. It was 157 million shares to the downside. The session on May 31st was 176 million shares, so it's pushing into that area with volume. Let's go take a look at the Qs, see what the Qs here are doing. Then we'll take a look at the IWM. As we take a look at the Qs, trading out right now at 72.76. The Qs also have a hammer candle that it has not pierced or touched. That's the low from 2 trading sessions ago, June 3rd. That level is 72.43, so that's the number that you want to make sure you are keeping an eye on. You get a close today below 72.43. That spells curtains for the Qs. No, what the curtains are only going to take you down to the curtain opening, which was the sign of strength, small sign of strength, only not from a volume standpoint, but just simply from a gap up. May 2nd, the top there, 71.43. The low of May 3rd is 71.91. That is where the Qs will head to if it breaks that hammer low. That price again is 72.43 out there, and I suspect that's what it wants to do. Volume-wise, 11 million shares today. The hammer candle that's got a break only had 47 million shares, so it does have the volume there. And then coming into the area where it broke out, I told you it didn't have the volume. It had just simply a gap up. That only has 34 million shares, so it is coming into that level hot. And what does that say? That says that it's at least going to go test the May 2nd area. And if that doesn't hold, it comes all the way down to the swing point established on April 18th out at $66.88. Let's go take a look at the IWM, the ETF for the Russell 2000. Let's go see what that is doing. That's trying to break a support level here right now. It is trading at 97.11. You had this big, huge key reversal session on May 22nd, as we did inside all the ETFs, all the indexes out there. That low is 97.11. You're trading just below that. Now, that had big volume. That had 68 million shares. Yesterday, coming into that, the IWM came in with 68 million shares. So 68 versus 68. And volume-wise here today, it's already done 14 million. So 14 times about 6 is what we'll use. That's got some volume. If this volume level were to maintain itself or continue itself throughout the rest of the day. Where does that take the IWM once it breaks the lows? And the lows here would really have to be that May 23rd low of 96.51. Takes you to the same gap here from May 3rd, either the 94.35 to the range of 93.47. That is where the IWM would want to travel to. Let's go take a look here at the spiders. Let's go take a look at some of the ETFs with inside the S&P 500. Let's go see what they are doing here. Let's take a look at the XLK right now. The XLK had made a 100% move, got above the swing point for September 19th, now trading back inside the lower part of that range. That swing point high had 17 million shares. As price got above that level, it did it with only 9 million shares out there. Broke back inside the range with 7 million shares on May 31st. Broke back into it yesterday with 9.2 million shares. The XLK wants to get down and test that same gap level. May 3rd, that's going to be either the range of 31.14 all the way to 30.96. That's what the XLK wants to do. But the key thing here is that it is now back inside the lower part of the range out here, signaling a potential false break to the upside. Let's go take a look here at the XLF. Let's see what the financial ETF is doing. The XLF right now trading out at 19.54. This has had one heck of a run off of the November lows out there. We saw key reversal session inside the XLF as well. Of course, you would expect that, seeing that we had that key reversal session inside the S&P 500, the NASDAQ, the New York Stock Exchange. So that's your May 22nd. That's really, in order for this to, for me to change my position that the market is not bearish, you would have to take out the highs from May 22nd really across the board. And it would really be the New York Stock Exchange that, in my opinion, you would be watching. If we take a look here at the XLF, this was not enough of a decline here. 2 trading sessions go on June 3rd for that to be a hammer. Was enough of a decline for it to not be a, well, it could have been a hanging man, but in this case here, right now you're trading below it anyways. It's also trading below, well, it's close to breaking the low here from May 23rd. That low is 19.49 out here. The volume on that session was 59 million shares. That was the first sign of weakness off of the highs out here. So you had that key reversal session. Then you had some decent volume on the next day, 59 million shares. Now today, inside the XLF, already 20 million shares. So it's now pushing that low with accelerated volume. That says that the XLF is going to want to trade down to that May 3rd area, somewhere around 1882, either to the high of May 2nd out there at 1868. So the financials, one of the stronger sectors within inside the S&P 500, it too is showing its weakness out here. Give me a moment here. We're going to go take a look also at the I'll do one thing here. We're going to take a look at the XLE. We'll take a look at the energy sector. A moment to do this here. Okay, so let's pull up the XLE. Let's go see what that is doing. So between the energy sector, the financial sector, and the technology sector, that takes up a substantial portion of the S&P 500 from a weighting structure. The XLE now, the swing point that's back inside its trading range, that trading range was established by the highs in March of 2011. I believe that's March 31st. The high was 80.97 with 18 million shares. What the energy sector did here, completed three beautiful patterns out here. It completed an A to B equals CD. They're on my screen here. The A point was the October 4th low. That was at a price level of 54.26. The high, or your B point on this, was February 24th. That was 76.50. Makes a retracement. Let's go see what kind of retracement the B to C leg was. Sure enough, just below the 0.618 level. The 618 level was 62.76. Actually got down to a low of 61.12 out there, so not too shabby. The A to B equals C pattern, that projected $80.37 as your completion point. Now, right at the $80.37 range, we had two butterfly patterns, two butterfly cell patterns, two 1.618 butterfly cell patterns. So you got three patterns completing at the same price range out here, and now we are seeing that the XLE is back below the $80.97 range, so it is back inside the lower part of its range out here. This could have also been a false break to the upside. That says that the XLE wants to at least travel down and test out that gap as well for May 3rd and May 2nd out there, and if that area doesn't hold, you'll see the energy sector come all the way back down to the April 18th set of swing points out here in the $73 and change level. So there's three sectors within inside the S&P 500 that have completed patterns. All of those are patterns where you see some type of retracement, reversal, what have you. Getting back inside the range out here also helps. So really we now have four patterns inside the XLE. Let's, for the heck of it, let's go put on our moving averages out here. I don't think that those have had a crossover, so let's do this. And actually, let's do this so I don't have to worry about change that to I didn't mean to do that. All right, there we go. Let's do it. This way I won't, my system won't freeze up on me right away. There we go. So now we've got the 9 and 18. They're a little bit different color here. We don't have that cross through just yet, but getting very close. Right now the 9 day is at 81.25 and the 18-day at 81.09 out there. And that additional cross through, that would give you another reason to say, okay, the energy sector now is ready to continue its move to the downside. Let's check in here on bonds before we go to break. So see what bonds are doing. Bonds here really holding the lows out here that were established back in the early part of February 2013. That low, 142.12. No bullish candle here. Well, a piercing candle today. But bonds, hard to say. Bonds should be moving higher with the nice correction that we have had inside the market. But we are not seeing that take place. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 95 points right now. S&P is down 11. NASDAQ off 21. And on my screen here, it's talking about the wider swath, the wider breadth of the marketplace. And as our man Z in the Den pointed out, every now and then we need to take a look at the Wilshire 5000 out here. So here's a truly wide swath of the marketplace. I've got that up on my screen if you're watching us on Tiger TV. The blue and the black line on here, that's your 9 and 18-day crossover. So you can see, again, coming off of that November 16th area, you finally had the bullish side. Again, these are lagging indicators out here. And the lagging indicator to the upside, that bullish crossover took place on, looks like it actually took place here on November the 29th out there. And never did it close below it. You really were touching the line and hugging it right here during the sessions of April the 19th, as we saw a little bit of a downdraft, as well as the area here on April 19th. We're seeing a very close to a cross through here right now. The 9-day is 17,281, and the 18 is 17,276. So we'll watch this here over the course of the next couple of days. If we see some continued follow-through, well, look at that. This just is giving you a better idea, a wider swath of the marketplace out there. And what is it that you should expect? What should you expect? You know, it's a great question. I'm going to show you what to expect because really it's my role to do what I can to help to protect your money out there. That's what we do here at TFNN by providing all the education that we do. So let me show you a chart out here. My newsletter, if you haven't tested my newsletter service out, I have an expanded version and then a shortened version that goes out each day. The expanded version is like 60 pages, a ton of information out there. So it just depends on what it is that you want to track. So all kinds of charts, covers all the ETFs, the indexes, all the stocks on our watch or buy list or what we're in, as well as a number of different charts that you should be aware of because they are leading indicators. They point to help us understand what's going on inside the marketplace. So one of those, I just have to figure out where I actually put that here. So give me a moment. I click on some of these tabs out here so I can see if I can find. No, it wasn't in there. It must be in my equal weight. One of the things I like to take a look at is equal weighted structures versus the weighted structures inside the S&P 500. This here, I don't know if I've shown this to you. The bottom portion of the chart here is the lumber futures. And what's interesting about lumber futures here, just another correlation is if you push them forward by about 5 weeks or so, 5 weeks, not or so. When you push them forward by 5 weeks, they tend to really replicate what is going on inside the S&P 500. That's what you see up here at the top. And when you see divergences, they are making you aware of an impending either market turn to the upside or to the downside here. Now, I believe that the first move down is going to take us into the July 4th area. And the reason being is just simply if I just come over and I take a look at where the market here started making its lows, and if I take a look at the futures pushed forward 5 weeks, you can see that there was a decent bounce here that took place on, I believe it was Thursday and Friday of last week. But if you correlate that and push that forward by 5 weeks, what you will see is that now there's going to be some bounces along the way, and that's really what you want to be looking for. Right now what you want to do is you want to be able to sell any rallies that you see in the marketplace. But I suspect that the first leg down really takes us into a decent low right around the July 4th area, and then we'll just simply go from there. And it's going to be dependent upon just simply how low and what some other indicators look like in the marketplace. And speaking of indicators, stay tuned because one of our best indicators, he's up next. That is Basil Chapman. It is Wonderful Wednesday. Thanks so much for being here, folks. Make sure that you have a great day, and I'll see you tomorrow morning. Take care.